Market to market. What is this market to market? In the case of derivative analysis and valuation, it's the process of recording investment in a tested security at a market value. So they're going to record something. What they're going to record? Market value of securities. It is a process of recording investments. They are recording what is the investment, what is the market value of this product in a database, and that is being shared to everyone. The future contract are market to market on daily basis. The market to market means at the end of the trading session, all the outstanding contracts are repriced at the settlement price. So, what is the settlement price? Settlement price is the price in which they bought. So, a product that is in the daily market, they will say that this is the price for the market. As per the price market, we will consume the goods. So, in this way, so the market is been recording the transaction and every trade has been settled as per the settlement price. Any loss or profit resulting from the repricing would be debit or credited in the margin account. What is the margin account? The account you have the money through the money you will create a contract through the contract you rather buy or sell your commodities in public exchange. Yeah, the profit and gain arising due to the transaction will be debited or credited in your account. That is known as margin account. This is how this derivative transaction works.